Good morning, everyone, and welcome to a brand new episode of Capital Markets Quickie. I'm your host, Endrit. So are you ready for a Capital Markets Quickie from what unfolded yesterday? Well, let's dive in. So stocks? Yeah, they had a bit of a rough day on Wednesday. Investors were chewing over a mix of earnings reports from the biggies like Microsoft and Alphabet, and let's just say the reactions were mixed. Plus, those climbing Treasury yields. They were really giving tech stocks a hard time. Breaking it down, the Dow Jones, it took a small dip, falling by 0.3%. But hold on to your hats because the Standard & Poor's 500 went sliding down almost 1.5%. And the Nasdaq? Ouch! It plummeted nearly 2.5%, marking its worst day in a whopping 8 months. Both the S&P 500 and Nasdaq ended up at their lowest since May. Yikes! Now let's talk Alphabet. Shares dropped over 9%. Even though they delivered on earnings and revenue, their cloud business didn't exactly shine. On the flip side, Microsoft was like this little beacon of hope. Their shares jumped 2%, showing that their AI bets in the cloud sector definitely paying off. But it wasn't all sunshine and rainbows. Other big names felt the weight too. Amazon and Meta, yeah, that's Facebook's parent company, both took hits of more than 4%. Speaking of tech, with Treasury yields on the rise, they've been feeling the squeeze. The 10-year yield, it climbed past 4.9%. And the 30-year, it crossed the 5% mark. But wait, there's a silver lining. We've got some fresh scoop on Meta's earnings. Here's the rundown. Their revenue, a cool $34.15 billion, up by 23% from last year, beating expectations. Earnings per share, a whopping $4.39, a jump of 168% year over year, surpassing the forecast. Daily active users on Facebook? A solid 2.09 billion. Reality Labs? Well, they reported a loss, but it was slightly better than anticipated. As for their outlook for Q4 revenue, they're expecting somewhere between $36.5 billion and $40 billion. And one more tidbit. They're trimming their 2023 capital expenditure outlook just a tad. And that's a wrap for today. But don't worry, I'll be back tomorrow morning with a brand new Capital Markets Quickie.